Hello good people, it's me Kumonawa, your money manager. In today's video, I am answering yet another question. This is the question that I've been receiving quite a lot lately. Every time that I share my stock investment journey, I will receive this question. The question is, which shares are available for me to buy in Botswana? Some will even ask, oh, I didn't know that so-and-so company is still selling shares. This goes to show that maybe we have left some behind. There is that lack of understanding in terms of what really happens in the stock exchange. I'm going to try to explain it in very simple manner. Excuse me if I'm going to be complicated, but I'll try as much as possible to be simplify the answer to this question. So let's understand where it begins. When a company sells its shares for the first time on the stock exchange, is going to do that through listing. When it lists, it becomes a public company. So when the company is selling its shares for the first time, we call that initial public offering, IPO. I'm sure you've heard this word, initial public offering. So what happens during the initial public offering? It means that the company will sell a certain number of shares. This is its limited supply. Let's say a company is selling 100,000 shares for the first time. These are the only shares that are available, 100,000 shares. So for all the investors that are out there who will be interested in buying these shares, they're only going to buy from this limited supply of 100,000 shares. All investors will be buying for the first time. And remember, I have said when the company is selling its shares for the first time, we call it initial public offering. So what then happens after the initial public offering? Let's go back to those 100,000 shares. The 100,000 shares are now going to be in the hands of investors, you and me. Everybody who had an opportunity to buy during the initial public offering will hold these shares. And that's the limited supply. The shares are only 100,000, nothing more, nothing less. Unless this company decides to issue more shares, this is when the supply is going to increase. But for now, we are dealing with the limited supply of 100,000 shares. So what then happens for me to buy shares? Like I've said, the 100,000 shares are going to be in the hands of investors. So it means that if you want to buy these shares, you have not bought during the IPO, and now you want to buy, it will mean that somebody from these people who were able to buy during the initial public offering will have to sell for you to buy. Somebody will have to sell for you to buy. So therefore, shares are going to be exchanging hands amongst investors. If nobody is willing to sell these shares that you are looking for, there's nothing that you can get. You're gonna have to wait until somebody decides to sell. What happens? Why do people sell? I bought during the initial public offering and I'm holding a number of shares from this company. Why would I decide to sell? Why do people sell? 3 reasons that I want to share with you of why people sell. Number 1 is need for cash. You have bought from this 100,000 shares and you realize that along the way of your investment, you need cash. So the only way for you to get cash is to liquidate these shares. When you liquidate these shares is when you sell. You sell, and in exchange, you are going to get cash. And when you sell, somebody has to be there on the other hand to buy. And you as a buyer, this is now the opportunity. This is now when the opportunity is going to be availed for you to buy. Maybe it's many of you who are looking to buy this particular company. So if it's many of you looking to buy shares of this particular company and there's only this limited supply, what is that going to do to the price? This is now when we look at the issue of demand and supply. When more people are looking to buy this particular company from this limited supply, this is going to push the share price of that company up. People sell because 1, they need cash. For you to get cash, you have to sell what you own, then you will get cash from the buyer. And this buying and selling is going to happen through an authorized broker. You are not going to go directly to the company that you own and say, I am selling. You have to do it through your broker. And remember, in Botswana, we only have 2 brokers that you can do the selling and the buying through. Number 1 reason for selling is the need for cash. Number 2 reason for selling would be the need to rebalance your portfolio. Let me say I'm an investor and I have created a portfolio, and in my portfolio I have limits in terms of the number of shares that I can own or the value that I can own per this company. This is now when we look at your portfolio as a whole, and you are saying to yourself, at any point in time, I don't want to be heavily concentrated on one company, or I don't want my value to be leaning towards any one particular company. I want to have a balanced portfolio where all the companies I'm owning bits and pieces of everything, and it all balances out. So if it happens that at any point in time, one of the companies that you own, either the value is too high and you find yourself heavily exposed to that company, there might be a need for you to rebalance. And when you rebalance because you are heavily exposed to this company, this is now when you are going to sell to try to reduce your concentration risk, to try to reduce the value or the number of shares that you own in this company so that your portfolio can balance. We call this rebalancing. You are balancing your risk and your reward and your portfolio at any point in time. That's the second reason why people will sell their shares, rebalancing their portfolios. Number 3 reason for selling is you are an investor and you have been holding or owning this particular company, and it happens that you lose confidence in this particular company for whatever reason. There are many reasons that will cause you to lose confidence in the company. So because of that loss of confidence, you decide to sell. I no longer want to own this company because maybe the prospects for this company are not looking good. Maybe I have been holding this company and the performance hasn't been satisfactory. I haven't been getting the returns that I have anticipated. Or maybe there are just some issues with the management of the company to an extent that there is instability within the company. So there are many reasons why you would lose confidence in the company. Maybe also the sector where that company belongs is no longer doing well, and you want to get out of that sector. You want to cut your losses when you still have the chance. These are the reasons why you'd want to sell. 3 reasons why you want to sell. Number 1 is the need for cash. Number 2 is rebalancing your portfolio. Number 3 is loss of confidence in the company that you have invested in. So every time somebody is selling, it creates an opportunity for you on the other side as the buyer to buy those shares. This is the only time that you are going to buy, unless if the company is selling shares for the first time and you all have an equal opportunity to buy shares from this company. So what you need to understand from today is all these companies that are listed on a stock exchange, at any point in time you can buy for as long as there's a willing seller on the other hand. I hope I've explained this in very simple terms, and I hope this will help you with your in-stock investment journey. But in conclusion, what you have to do is you have to be very patient as an investor, because it doesn't mean that if you want to buy today, you are going to buy today. It will really depend on whether the shares are available or not. This is all that I wanted to share with you. Thank you so much for your time. I will see you in another video.